Hey everyone, welcome back to the Commercial Real Estate Library podcast. I'm Dayma and Garret. You know my co-host Garret McGillivray. Joining us today is Badr Elkhatib, the SVP of Acquisitions for CentreCourt. We've done this podcast before. Yourself and Andrew Hoffman joined us. We titled it "The Smartest Guys in the Room." So you guys are excellent. We really appreciate you being here, Badr. Thanks for joining us.
Thank you very much, guys. And I mean, I'm not going to say we're the smartest guys in the room.
We'll say that. Yeah.
I think, we've made some good decisions over the last couple of years, but that's, the extent of it.
Yeah. Yeah. When I was really like 7-8 years ago, my old mentor used to talk about you guys with such respect and admiration. And he was like, Andrew Hoffman, Badr, these guys, the company that they run, energetic. They're doing, like we talked about it on the last podcast, but just principled, always looking for the right deals. And anyway, so.
Yeah, look, candidly, just on that topic, that's very much Andrew's reputation and certainly Stephen Chimez. And that was actually the reason why I joined CentreCourt, 8-9 years ago, was that same exact sentiment around being around really good people who are principled and just making good investment decisions.
I love it. Okay, we'll dive into all that. We have a lot to unpack here today. It is, we just had the federal election. We finally have that in the rear view. There's a lot happening in the condo space. There's a lot happening in the interest rate space, tariffs. We got all sorts of stuff. And I think we want to dive into just, what's happening today. I think the first thing to unpack is what's happening in the condo market. If you can talk about Toronto specifically.
Yeah, look, I feel like maybe not say a broken record, but I don't want to beat a dead horse. There's very little happening in the higher rise condo market, right? Like I think we've all seen the urbanation reports. We've all seen like the sales numbers. We've seen the slew of projects that have launched and, have stalled or haven't done that well or, have launched and unfortunately been canceled. I think it's a lot more of the same. I think what we're looking at the horizon is probably less of that. And because people have kind of seen the data has told them effectively that you're not going to be successful. And largely it's not because of location or product. My belief is it's just largely about consumer sentiment, right? Like most people do not want to buy or invest, make a large purchase in something today with everything you listed. Like all that is uncertainty, right? Like tariffs, uncertainty, interest rates, uncertainty. I think the big change over the last couple of years is people felt like I have a job. Now people are getting more concerned about their employment. So I don't think I don't think the next 12 months are going to be, great for, resale and pre-construction, whether it's condo or low rise, just because the sentiment out there is people should be conservative, people should be patient, and just kind of see where the dust settles. I think that's the feeling I have. It's not really, based on any hard data. It's based on a lot of like anecdotal stuff. But we're seeing it. We have no intention, as an organization to launch a new condo project into this market.
Right.
Even with what we think is a really great value proposition, we just don't believe, people are going to be confident enough to make that purchase, even if it's great value.
I guess a couple questions like, what are developers doing in the meantime? And maybe you can carve it out. You don't have to talk about CentreCourt specifically because you guys have a different strategy potentially. But like, how are guys addressing land that they have sitting there? Or we were talking about a site that you may have built, but maybe there's no closings or what have you. Like, what's going on?
Yeah, look, I think every developer has a different story. And because every developer has a slightly different strategy. I can tell you, I'll speak to CentreCourt for a moment because obviously I can do that thoroughly. We've never carried inventory. So unlike some of our peers, when it came to sales, we'd always sell 100% of the units. We'd collect 20% deposits. So going to closings in this market, we don't really have inventory to sell. So as it relates to strategies to unload inventory, maybe like I'm not gonna say we're less versed in it. It's just less of an acute problem.
Right.
But that's one perspective.
And just for the audience, so if I'm
Sure.
have the right understanding, so typically you go to market, you sell 70% of the inventory, get your construction loan, build it up, then you sell the remaining 30%. Is that?
That is, I'd say, the typical approach by most people. And just to give some context, why 70%? That's usually the precondition required for financing. Right. So that's why that number is always mentioned, I guess, broadly.
Mm-hmm.
But there's nothing that stops you from selling more.
Right.
Our historical view has been development's a very risky business. Why add more risk? We don't speculate. When we underwrite, we don't underwrite future. We underwrite today. Like, what are rents today? What's the sales today? What's the hard cost today? If it works today, you're making an informed decision with real facts, not estimates.
Right.
And, we don't.
You sure you're a developer?
Yeah. Listen, we're not internal optimists like some of our peers. Like, I love our peers and they're great friends and colleagues, but we just have a different approach. Ultimately, what is our job? Our job is to deliver homes, is to deliver it with a certain return profile. That's the job I'm doing. It's not to speculate on creating more returns or that's not actually the job. Like, for sure you want to be able to do that, but that's not actually why I'm being compensated or why people give us their money to invest in these projects. Right. So I think you just have to take you have to just remember and remind yourself, like, what are we here to do? And for us, it's to build homes as fast as possible with as little risk as possible, which is very difficult when you're going vertical. And there's a way to do that. And our strategy is just to sell 100%. Now there's groups out there who have not sold 100%, and they've done really well because the market has gone up. And so, I'm not saying our strategy is necessarily the best. It's just makes sense for our return profile and our risk appetite.
You just don't go bankrupt.
You just don't go bankrupt.
Well, yeah.
Yeah. We're in the business of staying in business, right? And so, again,
which as we discussed with, what was his name? The gentleman who was talking about low leverage at his REIT. He was talking about how they actually have higher returns in the long term because in the downturns, everybody can only sell the most liquid assets, and that happens to be the nicest things. And so
that's right.
You end up winning.
And so, we had this fortunate, we're in this fortunate position, but we also take back inventory. There are people who cannot close today. So, we have to think about strategies to unload things. And we've seen other peers figure out the right strategy. The reality is, of course, we would all love to sell these units, to pre-con buyers or to end users. It's not happening today. I think sales are generally soft, broadly, as I mentioned.
Right.
And so what we are seeing in terms of unique strategies, like out of the box, is it's really these bulk condo deals. So I guess for the audience, some developers in some instances, and these are like people who've done really well on a project, right? Because they've basically sold their inventory, they've closed on 70% of it. Mm-hmm. They're sitting on a balance. And what they're saying is like, look, it's gonna take me a really long time to go out and sell 1 or 2 units a month. I might be better served selling 30 units to one person. And obviously that one person is not, going to be an individual usually. It might be a high net worth family, or it might be like a family office. Or it's probably too small for an institution. But it's like this new asset class that's kind of being created. And it's like, multifamily units in a condominium building. And I actually think it's a beautiful thing because, you guys are in the multifamily space. The beauty of this is like, if you need liquidity, you can sell 1 unit. You don't have to sell the whole building. So like there are pros and cons to it.
Yeah.
But this is I want to call it a new asset class. It's not a new asset class, it's just a new strategy. And so we've seen 1 or 2 or 3 kind of portfolios of 25 to 40 odd units trade. Mm-hmm. Obviously, when you're buying like, that volume of condos, the pricing happens to be a bit more attractive. You don't have access to typical financing. You have to kind of go find a bespoke financing solution usually for something like that. But that's the only real, let's call it liquidity lever that we're seeing out there. And candidly, if prices get low enough, we'd be interested in buying inventory condos. Like, we believe in the condo business. Mm-hmm. And I'd be long condos if it was in the right building at the right price. If it cash flowed and you have a long enough investment horizon. And I think that's key because people often think real estate's a get rich quick scheme. It's not.
Right.
So if you really like an asset and it's priced right, we're seeing that the market will accept that, at least from larger institutional or private families.
I guess in terms of like a little more long term, what are your expectations on when do you think the condo market will come back?
Yeah.
Meaning like able to launch pre-sales and
Their stuff's
sell
moving.
70%. Yeah.
My default is we don't forecast anything, but that's like, I don't want to cop out. So I'll share my personal view on this. And by the way, what's this based off of? I'll tell you. I don't think there's a robust condo market for another 3 years.
Wow.
Don't hold me to it. I hope I'm wrong.
Yeah.
By the way, like I would love to wear it if I'm wrong. It'd be great. Much prefer to be wrong.
Right.
But why do I say that?
You're just saying that so you can go buy all the good sites.
No,
I know.
no.
That's like the next
Listen,
question.
I'm just kidding.
Yeah, listen, we are buying the good sites. We're trying to,
Yeah.
but I'll tell you, like,
Actually, that would be perfect timing, basically.
it'd be perfect timing.
Yeah.
I'll answer your question in two ways. Firstly, when this all started, let's call it unraveling. Call it May, almost this time, like in 2022. It's almost been 3 years. For the record, like I'm 35. I've been working for 15 years. I've only seen a good market.
Mm-hmm.
I thought I saw like a rough market, like in 2011. Turns out it wasn't rough.
Right.
So we're learning as we go here. But one of the things that I looked at, I said, okay, well, in 2010, like 09 to 11, like that was kind of like 2 years, right?
Mm-hmm.
I know that was a tough condo market, like tough broader market. So I'm like, okay, 2 years, and then I saw COVID. I'm like, well, that kind of happened a little bit faster. Obviously there was like a crazy monetary easing and just like just a massive influx of capital into the space. And so I mistakenly just said, you know what, I think things move faster today. I think we have more access to information. People are more able to shake things off and reset. And so I said, I think we have 2.5 to 3 years of, let's call it like a stale market, quiet, before it has legs again.
Right.
Well, we're 3 years into it now. I can tell you I'm wrong, right? Like the market's even worse.
Right.
And so then I go back and I talk to some mentors and people who've like have a lot more, experience than I.
Yeah.
And when I speak to them, they say, well, look, back in the 90s, this was like a 6-7 year cycle. And so I'm starting to adopt that mentality of thinking, okay, maybe it could be longer. And then just my personal boots on the ground experience, it's kind of like the stages of I can't remember what it's called, maybe the stages of grief, but it's like first, like there's like whatever, like exuberance, and exuberance turns into like you start like accepting reality, and after you accept reality, you go further down and like
Right.
and
this is like a leaf
Denial,
span.
acceptance.
yeah, denial, acceptance. That's exactly. Like I'm doing a poor job of articulating this, but like when in 2022 I was like, guys, I think there's a problem, and people were like, no, you're crazy.
Yeah.
And then like in 2023, people were like, no, there's a problem, but it's gonna get better soon.
Right.
And then now people are like, okay, there's a problem, but listen, I'll sell it to you at my cost. And I'm like, well, that has nothing, that's not relevant to me.
Yeah. Yeah.
And so I think we have a bit more ways to go.
Right.
And again, that's just based off of the way people are interacting, right, in the marketplace.
Mm-hmm.
I think, I won't speak to your business, but I'm sure what you've seen is that price gap really start to taper in over the last 6 months, 9 months, as people kind of realize like this is not going to get fixed in the near term. I'm not suggesting it's going to get much worse or much better. But even if we're just where we are today, it's not a great outcome. And so my view is that things will probably get modestly worse. I don't know how much worse, but I don't see them getting better.
Right. And if we follow the knock-on effects of your timeline of 3 years, I won't hold you to it.
Yep.
But like, what else happens there? Where do the real opportunities open up? Where do people experience the most challenges? Like, what do you see happening?
Look, I'm just like a fundamentals like based like investor. So for me, a robust market created a lot of opportunities in the outer 416, 905. I think a lot of that is gone. Because ultimately high-rise living in particular, or multifamily, like it's appealing when the low-rise lifestyle typically is out of reach financially.
Right.
And what we're finding is obviously there's been a reset in low-rise as well as high-rise. And so people, if they can break into the low-rise market, assuming there's a supply and availability, there is supply, that's where their dollars are going to go first. And that spread between low rise and high rise, it's very wide today. But if you look at it on a sub-market basis, it's far less wide in places like Kitchener or Guelph or Hamilton. And that makes sense. Those places were not really high-rise condo markets up until recently.
Right.
And, I think a lot of people saw those markets as like they're maturing, because I think that's what high-rise really indicates. It's a maturing and growth of a market. Today, I go back to where the market was already mature and had grown, which is in the downtown.
Right.
So today, I'm very focused on the downtown. I think of when I think of our business and our appetite for land acquisition, I want to say, and people who know me, I say this all the time: Front Street to Finch, Yonge, 200 meters east, 200 meters west. If I don't know the side street, you better tell me really quick where it is. And if I don't know, and I don't think it's a great neighborhood, and what makes it a great neighborhood? Access to transit, good schools, high home prices. I need a value proposition.
Right.
We have to get back to selling homes. When you sell homes, it's not just here's a building. It's why do I want to live here? Well, the homes are $2.5 million. The condos are $800,000. So you have check mark.
Right.
It's in a great school district. It's a top 10 school district in the city. Great. People who have young families care about that. Check mark. Hey, your groceries are across the street. It's always across the street. Check mark. And like, why is that stuff important? Because when the market comes back, there's going to be a ton of people launching. And so now you're competing against other great projects, and you have to be well positioned. And I think the dollars are going to come back to the downtown first, because that's where urban living truly is the strong preference.
Yeah.
And then beyond that, it's where like the gap in value is the most wide. Like the difference between a high rise condo and like a semi-detached in the city of Toronto is crazy. It's like $700,000. So like people are going to buy that condo.
Yeah.
That's not the same in Mississauga where I grew up.
Right. Interesting. And then in terms of identifying opportunities, are you going out and buying the big swaths of land? Is it more focused on assembly? And is there a big gap between approved sites, unapproved sites? Do you want approved sites right now?
Yeah, look, you're touching on a lot of themes. So I'd say for us as a company, we actually bought a ton in the outer 416, and we did a big 905 acquisition.
Right.
So we bought the Pickering Town Center. We basically bought 60 acres in downtown Pickering.
Right.
So let's call it. You can call it a covered land play. It's an income generating asset, being the mall with all the excess lands around it. We launched 2 towers there. We're breaking ground on those very soon.
Wait, how big is that one again?
Like 60 acres.
Yeah. Monster.
So
yeah, that's like East Harbor. Same type of thing.
And so when I look at our exposure, I think we're good on the
Right.
on the outer 416 905. We also have a big presence in Etobicoke. So I think if you think of the way I think of our book is, obviously you can look at it from a land price standpoint. You can look at it from like a geographic standpoint. You can also look at it from like a price standpoint. And today my goal is to basically inject 416 product into our balance sheet, inject it at effectively pricing that brings down our overall cost of land, that brings down our call it overall average weighted sales number.
Mm-hmm.
So I don't want to buy anything that's more expensive than what I currently own.
Right.
If that makes sense. And I want to buy in areas I don't have exposure to. So we don't have exposure like on our balance sheet to Midtown. We don't have exposure to Young Shepherd, Young Finch. Those are actually great neighborhoods that are on transit that have historically been undersupplied, underbuilt, because North York has its own quirks. So I think there's opportunities there. There's also opportunities again in select pockets. Like if you're by Old Mill Station, great neighborhood, like it's highly desirable, but it's just a different product, right? It's typically higher end, more. I hate when people say end user focus. It's just people who have a lot of money are probably selling a house. That's not who we build for. We build for like first time home buyers, meat and potatoes in the market.
Right.
So it's the combination of the right location for the right product. And where I don't want to be is I don't want to be in places just because there's transit. I get this all the time. There's a GO station. I'm like, that's great. Like what else? Like,
right.
Once upon a time that was enough, but not anymore. It's not enough. Like I don't care that you have access to transit. Like not everywhere that there's a transit site can I just put a building up and think it's going to be successful. And then 2, I don't need 1 million square feet.
Right.
I think this is
that's a good point.
This is a big, and by the way, I don't know what the right number is.
I hear that all the time too, but I can build 1 million square feet. I can build 2 million. Like nobody wants to do that there.
I can tell you, I was speaking to a land vendor and, he was coming at me. He's like, well, I don't understand like your pricing. Like I can get 50 stories here.
Right.
I said, yeah, I agree with you. I probably get 55.
Yeah.
I just can't build it. So I'm not paying you for it. Like
be the tallest building in Barrie by 50 stories.
Yeah, exactly.
And so that's but that's the reality today. The reality is, and that's adds a different kind of dynamic to the marketplace, right?
Right.
Where people are like, what happens if it turns back on? I'm like, listen, I don't know what happens if it turns back on. Like today we're looking at sites and saying, okay, we can get X, but how much can we sell? And that's more of an art than a science, right? It's so today, like I like to be 250,000 up to like 350,000 square feet, no more than like mid 40s, like at the max, ideally 38 to 40 stories.
Right.
And why is that? Because it's a really efficient construction. It's the right number of elevators. It's the right lifestyle for the people who live there. Like it's not a ton of inventory. I feel like we can actually move through that product and deliver homes in a time frame that actually is like, manageable for people buying in the building. So there's a lot of rationale for it.
Right.
But it is tough, right? It's tough to accept. And again, it goes back to like where we are in the cycle to accept that like, this is not actually, $100 a foot at 50 stories. It's, $80 a foot at 40.
Yeah.
And some people just can't transact on that basis.
We go through that exercise day in, day out. Like that's what 2025 is about. It's like half of our pitches because we want to be realistic. We don't want to overpromise and underdeliver, right? The opposite way is the best. So like half of the conversations are owners telling us, well, like this guy offered me $400 a door in 2021. And you're like, well, get in your time machine.
Yeah, get the time machine.
Yeah. But it's still in multifamily, still a lot of liquidity existing. That's what I'm talking about. But yeah, that resetting of expectations takes a while.
Takes a while, and by the way, it's hard. Like what are revenues today? Right? Like, it's really hard to forecast. Forecast even using today's numbers. Like, we look at existing condo resale, as like our barometer of pricing.
Yeah.
So we say,
so
okay.
How do you? Yeah.
Well, the problem is like, if you view the market's going to get worse tomorrow, can you actually look at today's resale data and say like, this is what I'm going to underwrite, or like, do you go to an extreme and say it's going to get worse, or do you think it's going to get modestly better? How much of a premium are pre-construction buyers going to pay for a pre-con unit relative to resale? Like there's so many different ways to, think about that top line. And I don't know which one is accurate, right? Like we're not going to know for 5 or 7 or 10 years who was actually right or wrong.
Yeah.
But today, making a purchasing decision, it's really tough to go out and commit capital if you don't feel like the wind is at your back.
Right.
Even for a group like us, who like we're well capitalized and I'm eager to buy and we are buying.
Yeah.
But candidly, we run our performance, we run our sensitivities, and part of it just saying like is like how much optionality or flexibility do I have at this land number, right? If I buy it for X, can I sell it for resale?
Yeah.
If I buy it for X, can I turn it into a rental? If I buy it for X, can I, what can I do with this at this price? And we don't want to pigeonhole ourselves into one strategy or one whole period because we don't know what the future has in store. So trying to make smart buys that set you up for success over the next 3 to 5 years.
Yeah. Okay. So if you're listening, stop right now. If you have a site at, what did you say? Shepherd and Young, Midtown, look batter up.
Yeah.
Call
Young and Davisville,
up.
give me a call.
Young and Davisville. Did you stop? Did you pause? Okay. We'll see if that works. That would be pretty cool.
Yeah, that'd be cool if I get a call. Thank you guys.
yeah. But in the room, in the deal. So I think it's a good segue when we're talking about how do you project where you're going to be. We just had a federal election. How are you guys thinking now about immigration policy? We have a liberal minority government. Is this influencing your site selection? Is it influencing your projections?
It's a good question. And, I think we've learned a couple lessons over the course of at least my career. One is just be careful. A lot of politicians make a lot of promises when they're on the campaign trail. Mm-hmm. How much of it actually, gets made into policy is another thing. what that policy looks like at the end of the day is a completely other thing. And then there's like these secondary effects. And I'll give you an example. Like the provincial government went out and they said, hey, we're going to freeze DCs when you do a site plan application. And we're going to give you a DC discount, actually. And it was great. I think that's something the industry was advocating for, and we were all thrilled because obviously DCs are like far too high.
Right.
But then what we found was roadblocks at other levels of government across the province, where now the municipality created a new charge, or they put up a barrier that you actually can't submit a site plan application for X period of time because you actually have to do these other things in advance now. Right. And so it's a long-winded way of saying I don't underwrite any of these things. Like once they happen, we'll look at the details, we'll understand exactly how they work, and then we'll apply them. But I think it's a fool's game to think that like the conservative said this or the liberal said that, and it's going to happen, and we're going to go preemptively buy land on the basis that this is going to take place. Like it goes back to the initial part of this conversation. Like we don't gamble. We're pretty risk averse people. This kind of seems like you might as well put like $100 on 0, 00, and 000 at the casino, and just because they're all next to each other on the table, at the roulette table, I should say.
I have like 4.
Like it doesn't make sense.
I have 4 developer faces in my brain right now that I'm thinking of. Like, yes, let's go.
And the reason why is just it's kind of lived experience. We've heard these promises, and then when the policies get made, they're just different. And it would have been a massive misstep to have thought that was going to take place in the shape and form that it was communicated to us. So I think we're being patient. I think we're optimistic that any government, whether it's liberal or conservative, are going to do the right things by the industry. Like we are such a needle mover in Ontario and just nationally. Like I think there's been a lot of great work by Build and OHBA to explain that to people, like how many jobs are tied to the real estate industry. People often think brokers and developers, but they don't think about tradespeople, and they don't think about home renovation people, and they don't think about like all these other knock-on effects of the housing industry. Like don't quote me, but I think it's like 1 in 5 jobs, or like 15 or 16% of the jobs in Ontario are like real estate related.
Yeah.
Makes sense.
So we think they're going to do the right thing. What that looks like, I don't know. There's different programs, and I think the one thing I hope happens in this time of need is that egos are set aside. If someone had a good idea, whether it's like conservative or liberal, that people just say, yeah, that was a good idea, and we're going to adopt it because it's a good idea. Like be collaborative. Like, in the real estate industry, if someone did something like on a building, like we're really good at construction. At CentreCourt. Yeah. And often people will call us and say, hey, how the hell did you do A, B, and C? We don't just say like, take a hike. We say, yeah, listen, this is how we did it. Like, right. Like we're happy to answer the questions. And like, why not? Like, first of all, I think it's, there's nothing wrong with reaching out, right? And asking a question and learning. And ultimately, if it benefits everybody, it doesn't matter that originated with, A or B. The point is it's happening. And so I hope that people have that perspective when they're trying to enact policy. Like I'm speaking specifically to the 1031 exchange. I think that's a great program for our industry, and I think could really help, allow for transactions to happen.
I'm so glad you brought that up. The greatest idea. Would you mind unpacking it for us for a little bit? Yeah,
look, the 1031 exchange.
Let's get the message out there.
Like I had the benefit of working in the US, like in Canada, but like investing in the US. For several years back in my days at Tricon. And we saw the benefit of the 1031 exchange, right? Someone sells you, a piece of real estate. They make, a gain on it. Guess what? If they buy another piece of real estate in the same fiscal year, there's no tax implications.
Yeah.
And so like, what's the benefit of that? One, it clearly motivates people to reinvest. Right, in the community, in the state, or in our case, in the province. And I think that's a great thing, right? Because oftentimes, and I'm sure you've heard this, what do I do with the money?
Right.
And I historically have said like, dude, do whatever you want with the money. It's great. Like it's not my problem.
Money.
You have money. Like it's like rich people problems. Like I don't know what to do with but it is a real challenge. Like where do you actually invest it? And as you know, not everyone is sophisticated. A lot of people have are not comfortable with the stock market. A lot of people are not comfortable with like other things. They know real estate really well and they'd happily deploy it back into real estate, but obviously there's a tax consequence. So I think that's a great tool, even if it's a short-term tool to help us unlock the freeze that's there today. So I think that is a tool.
I think I just want to add, I think it would be the most amazing thing ever. Not just for transaction volume selfishly, but it would, like, one of my big concerns going through this election and getting hyper focused on policy is just Canadian competitiveness.
Agreed.
Like, we need a better tax environment. I hear constantly from not only clients, but guys in my office saying, man, I don't know if I can do this anymore. I got to think of a different strategy. Maybe what does Austin look like, and so on. And if you could provide some advantage to even selling some stocks and putting that into a development project or something, just as long as it's in Canada, we can build up, we can solve, you could make it tax-free to reinvest in anything that we truly need. Like, that could be the thing.
Yeah, like that's taking it like one step further. And I think that's amazing. Like the point is, if you invest in Canada, you should be given a break today.
Yeah.
And I think like that is, how that happens, I'm sure is far more complicated. And, I don't know if I have all the answers, and I'm thinking of all the consequences of it. Cause I think like there is nuance to all this, but surely I think we can all get behind, a program that allows people to, effectively take the benefits of their hard work that are kind of locked up in assets and redeploy them in other assets that are Canadian assets. I think that's a really great thing. And I think this is the time for it. So that's one policy. And I hope listen, I'm not smarter than Mark Carney. That guy's got a resume that's like longer than like a bus. I'm sure he knows about this. Like, I don't think I'm enlightening him with this wisdom that a 1031 exchange is a great tool. I'm hopeful that that he has the ability and the confidence to see through. This is not just like a conservative policy, and therefore we should dismiss it. It's a good policy. You should pick it up. And honestly, I commend them on this policy that at least we've heard about a little bit about, related to bringing back this really popular program, for what I understand, from the 60s and 70s. I think it's called the MERB program.
Yeah.
And I think that's it's funny. I'm not a student of history. I'm not gonna sit here and act like a savant. Or like a really like well-read person. Like I read a bunch, but I talk to vendors all the time. I'm like, I have a massive tax problem.
Right.
And I'm like, that's a great thing.
Yeah. Right.
It means I'm paying you a boatload of money. And no, it turns out they have a massive tax program because they use this program back in the 60s and 70s, and there's zero depreciated, but basically it's 100% gain. So the way this program, I think, works at the highest level is, if you invest in a real estate development project, let's just use $100.
Mm-hmm.
The project's $100. You're a 10% LP. So there's $100 of development cost. You're 10% LP. You get allocated $10 of cost, and you can use that $10 to write off $10 worth of taxable income anywhere else.
Oh, wow.
Right away.
Oh, let's go. That sounds
so
fantastic.
it's basically like
so then that's why they get hit with the tax.
Yeah, they hit with the tax burden down the road, because now it's 100% gain.
Right.
Again, I'm using this at the highest level. There's some nuance to it.
Mm-hmm.
But so the idea, what happens, right? There's a bunch of reasons why these doctors and lawyers own all these apartment buildings,
Mm-hmm.
because they all said, holy smokes, I got $100,000 of taxable income. Well, no, I'm going to take $50,000 and I'm going to go with my buddies, 5 buddies. I'm going to take $250,000. I'm going to build a 6-story apartment building,
Mm-hmm.
and I'm going to use the cost of that building to effectively write off 100% of my taxable income.
Mm-hmm.
Now, you're telling me at the end of the day, I'm going to own an asset and I've paid no taxes?
Right.
Oh, but I'm going to get hit when I sell it. I'm never going to sell it. And that's why you guys have a hard time sometimes unlocking some of these sites, because no one wants to sell it. But I think that's a good thing for the market.
And then Pierre comes in.
And then Pierre comes in with the 1031 exchange, right? Yeah. So there's a way, my point is that there's tools out there. And I think we should be brave enough to try them. I can't emphasize enough, how dire of a situation it is out there. Sometimes, there's a spectrum of good, bad, and ugly. And I think every developer, every group, every strategy slightly, sits slightly, on a different place of that spectrum. I don't think anyone is saying it's great out there. I think it's a spectrum of how bad is it for you. And so, I fear of the consequences. Like I'm a relatively young person. I fear about what this the housing crisis is really going to look like.
Mm-hmm.
Fast forward 10 years, it's going to be really bad.
Yeah. It's crazy. While there's a housing crisis, nobody can build it. It just doesn't make like. Okay, we've talked about some of the challenges. There's, of course, a lot of challenges. What are some of the solutions? We mentioned, okay, some developers selling little stacks of inventory, condo to apartment conversions starting to happen a little bit. At least the conversations are being explored. Like, can you talk a little bit about that or any other solutions that might?
The condo to apartment conversion is really tough. We've studied it intimately. Talked to a lot of people who are more expert around like the different financing programs. And why is it, right? It's like, again, nothing is as easy as it seems. The equity required for those deals is effectively, let's call it double. Mm-hmm. You're going from like 15% equity in like a condo deal up to like 25% plus equity in a rental deal.
Yeah, especially with the new CMHC changes, right?
Well, yeah, that's exactly it, right? So once upon a time, like you could finance these apartment construction loans with effectively, let's call it 85 up to, if you're doing ACLP financing, much higher. That's gone. Now it's 75% and it's EGI based, and you get the money after stabilization, and like that doesn't help anybody. And look, that's a move from CMHC basically saying that I think we have too much exposure, or maybe like their current program, like the deals they finance, are not doing so well. Like I don't know, but clearly they're reacting to something that they're seeing on their end. I don't think they're like just people like to blame government for a lot of stuff. I don't think someone's like, this program is so successful, let me change it. Mm-hmm. Like I think there's probably a reason there, but what it's done is put a lot of pressure on the industry to fix this. And conventional financing, for the most part, is in that low 70s to 75% range. And then, could you get more financing? Sure, you could, but then that's more risk, right? Mm-hmm. So I think just the capitalization of those deals is difficult, right? The sponsorship of those deals is difficult, right? Not every high-rise developer can be a rental developer, right? Not every high-rise site can necessarily translate into a rental site per se, right? Like, so there are nuances to it. And then just the last piece of all of this is the rental market is experiencing softening too. Right. So like, what are you doing?
Cut that.
What are we talking about here? Yeah. This is it's not a podcast on the market. No. That's so that's the truth.
It's still difficult to predict, especially in markets where there's a lot of condo development and, other dynamics.
By the way, this is a moment in time thing, mm-hmm. right? I think I believe this is a fantastic vintage to be investing in, high-rise land or multifamily. Why?
Yeah.
Because if it takes you 4 years to build a rental building, you're delivering effectively in 2029. Well, look at the supply that's coming online in 2029. Like, yes, 2025 is a big supply year for condo. 2026 is going to be smaller but big. Then it's dry.
Yeah.
So I actually think this is a great vintage for that type of investing. But it doesn't mean that when you're running the pro forma, people are still focused on today's rents and today's growth. And it comes down to how you forecast. If you're a long-term owner, I like to think that things revert to the mean over time. Mm-hmm. And so if you are holding this asset for 20 years, you shouldn't care.
Right.
If you're trying to buy, build, and exit in 4, yeah, I wouldn't do that today. Because it just, the risk doesn't feel right. So I think it comes down to you as an owner, you as a developer, what makes sense. If you're truly going to be long-term, I think we have a really interesting opportunity right now. I think if you're trying to speculate, I think, the volatility is high and you might win, but you also might lose. So it just comes down to like your appetite.
I like the long-term contrarian view.
I do.
How to make a lot of money.
Have you ever, like they did do this in the past and lenders sort of clamped down on this, but there were a number of developers that used to say they were building an apartment building and then upon completion,
what are you talking about?
Sever it all and then sell it as a condo.
Okay.
Whereas
I'm only familiar with one group who did that, and I don't know the story behind it. But yeah, I know it was supposed to be an apartment building, and then they basically sold it as condos. I don't know how widespread that is, to be honest with you. Look, I can just tell you that's something that we would never do. Like it just, I can tell you for us, it's just like, what's your business plan? Execute on the business plan. I think if you're doing that. I don't know what the financial impacts of that are, but reputationally, like that's not great.
Yeah.
You know, I think we're in a fortunate position today because we treat everybody as a partner. So that means like the landowner, the banks, obviously our own capital, like we treat everybody like what's fair. Let's be like 5 degrees on the right side of fair. And I think that's just so important because it's times like this where we're relying on our partners to support us. Like right now, like I'm trying to buy land. And we have a great relationship with the banks. The banks have told us, as an example, like, yeah, you're one of, a handful of people that will finance today. And I don't think that happened by accident. I think that happened by doing really good business for 15 years and following through on what you tell people you're going to do. So, if you want to be opportunistic in that fashion, like all the power to you. I don't think that's not like in my mind, like a winning plan for like long-term success.
Like a quick question on having doing the construction in-house versus a different strategy. Like how is CentreCourt different in that respect?
So broad statement. I think if you're in real estate development, and it's a very like broad way of describing the industry, I think like a lot of people are in real estate development. I think today you got to be a builder. Right. How many builders are there? And so we're one of a handful of builders.
Yeah.
And
a lot of people are in real estate entitlement.
Right. Yeah. Which, by the way, that is not a great business to be in. You know why? Because there's 60 stories everywhere. Right? Like, like it's once upon a time it was hard. I still think it's challenging, but kudos to the city of Toronto. Like I'll give credit where credit's due. Like, yeah, I've seen a lot of people who first time zoning a site, getting it done pretty quickly.
Right.
Getting great outcomes. Like,
okay.
Right. Like
so you're not going to take a $5 million parcel and make it a $30 million parcel from.
No, I think those days are gone. And by the way, listen, I'm
appraised value.
Yeah.
Appraised value. Yeah. And I think those days are gone. I think you might unlock some of them on the margins. And by the way, like I do land assembly work. So, like I'm not like shooting a shot across the bow. I'm like effectively, talking down my own skills. Like it's still really, really hard to assemble. It's just less valuable. Right. Right. And that's okay. That's like, it's a moment in time. But I actually think it's the right thing for the city. I'm not going to like sit here and say it's a wrong thing. We have been advocating for more density everywhere. It's now largely available in areas that it makes sense. And, but there's unintended consequences. If you bought something for $50 thinking you're going to flip it for 100, it's not 100 today. So, what's like your only option is you got to build it. And, our historical view and our lived experience has been, you can't rely on third parties to do the job of an owner. As you guys know, like an owner mindset to anything you do is just different. You care a little bit more. And we have the hard data to show that like that caring a little bit more actually translates into better results. Right. So I can tell you our construction costs on average are, significantly lower than that of our peers. There's a thousand reasons why. This isn't like one silver bullet, but like part of it is, if you have in-house construction, you're designing buildings with construction in mind.
Right.
So you're doing the zoning with construction in mind. You're putting amenities in areas with construction in mind. You're designing, putting the hoist in locations with construction in mind. Like you're doing all these things. There's so many small decisions that lead to good outcomes.
Right.
Secondly, you're actually hiring the people who you trust to deliver on the product, right? So in our case, like we have 2 heads of construction. They're partners in the business, right? Like they are my partners at CentreCourt. They own a piece of mothership. They are investors in our fund alongside us, and we offer all of our employees the opportunity to invest. So our site supers, our project coordinators, our PMs, like they have a vested interest in doing great work, just well beyond their salary and their other compensation. And so that ownership mindset, and something that I was striving for, one of the reasons why I joined CentreCourt is I wanted a piece of the action. I didn't care if it was small or big. I just wanted to feel like if things went right, I was going to benefit. And if things went wrong, on all of us. And like, that's not for everybody, but having that at our company and having in-house construction and hiring what I think is like the A++ team to deliver on it, has allowed us to build, for I'd say a very reasonable cost, well below market averages, and to deliver 50-story buildings in like less than 36 months. We've delivered 6 buildings that have averaged, call it 48 stories on average, all P2, P3 conditions with heritage on site in 34 months. These are all things we've done in the last 3 years. And,
Wow.
and so like, that's how you make money in this business. And it makes sense, right? It makes sense that you have to build something to be compensated. So like, this isn't like a radical thing. It's just not the way the business has operated in the last 5 to 8 years.
Yeah. Got a little crazy.
Got a little crazy.
2022.
Oh, I'm like, look, the number of people who just like, hey, I'm going to sign you these contracts and I want $10 million. I'm like, what? Why? And I'm like, I do this. I wish I got paid $10 million. Like, right. So, but there was a spot market, and for a moment in time that like, that worked. Today it's a different business. Today you're buying the land, you're zoning it, you're creating a little bit of value. Not much, but a bit. And really how you're making your money is by actually like selling and constructing and going through the heartaches of delivering product and making sure the warranties are right, like the real hard work. And I can tell you there's not a lot of people who actually want to do that.
Well, yeah, not a lot of people make it big, right? Not a lot of people are building 6 monster towers in 36 months. So I do want to, do you have another question?
I was just going to say this one's a little more market, I guess. Like there are a lot of lenders with a lot of workouts for a lot of condo sites. How do you see those guys getting through what they have on their books?
Look, it's top of mind for us. And I can tell you, we have spoken to the lending community. And it's a bit surprising, to be honest with you. Like, obviously we get there's personal covenants here in Canada. There's a lot of like deep relationships between like lender and borrower for the most part, not every case, but like usually the case. Despite that, I'm shocked to not really see the level of distress that like I would anticipate. Like I worked in the US and it's just much faster there. Like, and by the way, there's no shame around it. It's just kind of like, hey, this didn't work. Here are the keys. Like, and by the way, that person who gave the keys back would be back to that lender within like 12 months asking for another loan. And it's cool. That's just the way the market operated. Not the way it happens here. What we have seen is like select distress in like, areas that Canada, like CentreCourt doesn't have an interest being in, but also just more broadly, like as a market, like I don't think it's real ripe for development. Like, so, you see the odd one in Barrie or in Kitchener or in Cambridge or the odd one in Hamilton. There's select ones in Toronto, but the ones in Toronto have not actually been financial distress. It's more like bad boy, like, like borrower doing something like offside, which is, I put it in a slightly different category, but it hasn't been in significant volumes. And it's surprising to me. And, the pitch that we have made to, whether it's lawyers or lenders or receivers for that matter, is to say, look, you shouldn't circumvent like the legal process, right? But you should be aware of the following. You're going to foreclose on that asset, right? So you're going to put it into receivership. That asset now has to go to a receiver. The receiver is going to hire, a broker. That broker is going to do a phenomenal job for you. And they're going to get you, if you own a decent asset, they're going to unearth some bids. Those bids are going to come in and they're going to be well below your principal. And you have 2 options. You take the hit or you do a credit bid and you buy it. And what can we do to help with the latter? Because we don't think you're going to take the hit. You might have a different opinion on that, but like, what can we do? And we think that the only thing you can do is really build your way out of it. And so can we use our expertise to help you do that? The market's just not there yet, broadly speaking. Right. I've heard of stories, again, like I try to talk to people who have a lot more experience than me, and I've heard about a time where the banks partnered up with developers to do just that in the 90s. And listen, I hope we don't get there. I'm just surprised we're not seeing more of it.
It is weird. I thought last year we were going to start seeing blood in the streets, and again, it's I don't see as much of it because like my primary business is existing multifamily. Yep. Mostly I'm selling older buildings because there aren't that many newly developed until maybe a couple of years from now. We'll see. Yep. But you hear it a little bit, and Yeah, like we've worked on receiverships on behalf of private lenders and so on, and we'll get a few offers and they go no.
Yeah.
It's like that. It's so crazy because that used to be like the guaranteed sale as a broker.
Yeah.
You're like,
100%. Like, this is great.
And now you're dealing with the lenders like, we're gonna wait, we're gonna kick the can. So yeah, that's interesting.
I thought we do a lot of that type of business. It's just and listen, if anyone's listening, I'd love to do that type of business. Like I think we could really help be a solutions provider to people like that. And I think not just us, I think there's other groups who could do that too, who are very capable. And it's not like, why do I care about that? Because we don't want canceled projects, right? We don't want people to view pre-construction as a risky, like an overly risky part of the business. Like it should, you should have good people doing good work and delivering on promises. And if we could help with that, that's great. Like I think that net, yes, we're going to be compensated, but ultimately I think people who are doing that type of work are creating a greater good for the broader industry.
Mm-hmm. Okay. Two things, because we've been at this for a little while, and then we got to get you back to your office.
Yes.
Two things I want to ask you. What advice you've been at this business for a while? What advice would you give to perhaps a smaller developer who's kind of going through it right now?
Absolutely. So,
hold on.
You know,
hold.
Look, I think it depends on your situation. So if you're like a small developer who, like, let's just say has like one check at $20 million, and you want to deploy it,
right?
Hold on. Like I think.
Okay.
No, and I say that because like I think you have one shot. You have one shot to shoot.
Right.
You have one shot to shoot. It has to basically be near perfect. And I'd say patience is a virtue. Like I say that like I can be very open. We've looked at like 600 sites in the last 3 years, up until the first quarter of 2025. You know, like we've done a couple of deals in the last couple of months, but you know, that's a bad hit rate. And I don't think it's because we're like, not doing our jobs right. It's patience. Just make sure you know what you're buying and make sure it's right for you. I think so if you have a little bit of capital and you're gonna shoot a shot, just hold on. I think personally the market's gonna be your friend and show you some nice opportunities in the next 12 months. The market's gonna do poorly, so you're gonna buy something hopefully for a good value. If you have more money, more capital, I think there's some interesting opportunities today. And I think you could, as long as you're prepared to be buying throughout the course of the next 2 years, I think you're going to average out really well as well. Yeah. I think if you are building something actively, get that building built. Don't fall into this trap of like, people can't close. I need to, no. Like, guess what? You know what's worse than that is like incurring a ton of interest expense and carry costs and all these other costs and then not having people close. Like if you're going to like go through that, minimize your costs the best you possibly can, like finish that building ASAP and just hold your breath and work through the problems that are going to be there. But don't take this approach that like time is your friend. Time has proven not to be your friend. Time is never our friend. I hate people who say with the passage of time, everything. No, it doesn't. Like time is risk from my view.
I don't like time.
I don't like time either.
Time kills everything.
How many times have you called somebody and said, hey, and said, do you want to sell this? Like, yeah, that's great. And you waited a week. You don't wait a week. You put a paper in front of them within 48 hours.
Oh, yeah.
Right? Like
I have a listing agreement on me at all times. I have one right in my pocket.
But that's real life, right? So
not true.
It's not true, but
pull it out.
Pull it out.
This is lip chat.
But it's important, right? So like, because
pretty slick.
That'd
be very slick. If you already had it all filled out, come on. A little presumptuous, but slick.
CentreCourt. Yeah, it's like a real estate condom. You're like ready.
ready
at all times.
But why do I share that? Because like I heard that early on. I was like, oh, we're just gonna take longer to build. I'm like borrowing at like 7 points. You're gonna take longer to build. Like, you know how much that costs? Like that's a crazy solution to a problem.
Yeah. So you do see that though.
100%. Like I've heard that from people. I don't know if like, people actually do it, but like there are these strategies to say like, listen, get to the finish line ASAP.
Yeah.
And shore up your balance sheet. Like right now, it's tough times for everybody. And equity and debt is not plentiful. Mm-hmm. So if you're small, just make calculated decisions. You might want to go buy all cash and just get the financing later when it makes sense to do so. Just be more prudent and more conservative. And it's all about cash flow, as we all know. It's all about cash flow. Just make sure you have enough cash to hold on to your property. Like that's really the advice I can give. Like I don't really have much more than like treat people really well, be conservative, be patient, and don't believe that tomorrow will be better today. That's like a wrong approach to business. Just finish what you're finishing and then deal with it. You'll be better off for it.
Yeah. It's great advice. My final question, and I know you said you're not reading all the time. What's the best book you've read in the last couple of years? Doesn't have to be real estate related, but it can be.
You know, what's the best book? I mean, you don't know me very well. I'm more of a podcast guy than
podcast then.
But you know what? I listen to. I'm showing a lie here, guys. I listen to a lot of murder mystery.
Okay.
And I listen to I listen to like Dr. Death, and I listen to like these like and why? Because I need an escape.
Yeah.
I don't like sitting in front of a TV.
Yeah.
I'm just not that person. I like
a 4-year-old. You're not.
I have a 4-year-old.
Yeah.
But I like listening to. It sounds crazy, like more gruesome, like murder mysteries. I find that is. I don't know why. I think like I find it interesting. Like because it's so foreign that people
different. Yeah.
People can do that to other people, and also I really like actually hearing how the police and the investigators do their job, which is really difficult. Like if you think about what these people actually do, I think we forget in society that these roles exist in our very privileged seat, and it's really humbling to hear how people can bring comfort to families. So like I think like the process is really interesting. Ultimately, I think I have a lot of admiration for people who are in like the healthcare sector, in like police services, firefight, like first responders. Like I just I have a friend who's a paramedic, and I think that's how I got into it. And like he would tell me stuff, and I'm like, that's crazy. And then you start listening to these stories, and you just appreciate how fortunate we all are in our day to day.
This is now everybody knows the way to your heart. You're gonna get a call.
Yeah, I know. I was hesitant to say.
There was a murder.
There was a murder.
There was a development site at Davisville, and it's haunted because somebody slaughtered in the basement. Yeah. Okay, we gotta wrap it up. We're gonna lose the whole audience, but thank you so much. You are awesome.
Oh, thank you.
CentreCourt is awesome. It's no surprise that you guys are so successful in downtimes and uptimes. I don't know if I did that in the right direction, but we really appreciate your time.
No, thank you for having me, guys. It's a pleasure. And like if you have a piece of land, call me. If you're looking for a solution, also call us. Maybe we can be helpful.
Absolutely.
Awesome.
Thanks, Pat.
Thank you.
All
Thank you, guys.
Thank you.
You're the man.